Start streaming. Make sure this is going. Alright, that looks good. Make sure you can see. Alright, we are good to go. So, who's taking notes? Myth or Raul? Myth, you got the spreadsheet to take notes with? Basically, what I want you doing, if you want, is each sector. Some of those sector names we need to update. It may be. I mean, that's one that we're gonna go off of. But if you want to make a whole new spreadsheet, it's fine. I might actually do that myself. New, open. Oops. Spreadsheet. All right. So should have. Do technology or tech as the first one. Alright, so let's go through the watch list from the beginning. So basically what we're going to do is we're just going to create our watch list here. I have all of them in here that we want to go through, and we're going to decide whether we want to keep them or not. Apple, I think, is a wonderful one to keep for going long, even at its current price. Its financials support it, so I believe they always really beat earnings, and even at the current price, I still think they have upside to at least 150 in the next year or two. So let's keep Apple as a tech play and move on. That should be fairly easy. We all know that. So AbbVie. So AbbVie I did not pre-screen. So we're going to look into the fundamentals real quick here to support whether they look good going along. So AbbVie's price to earnings is a 16.75 in the fintech space, which is roughly between 20 and 30. So even at its current price, and we're looking at cash flow, we see cash from operating activities going up every quarter. Or this is every year, and even quarterly they're going up. So balance sheet, they do have a lot of debt because they acquired a company. So we're going to put biotech as the second one. So basically what we're going to do is we're going to create like a top 3 to 5, and we're going to add these in right now. And if we don't like one, as we add, like let's say we get to 6, then we'll have to subtract one. So we're going to keep AbbVie and biotech for now. So ABC is like one of these like weird lower volume ones, but the chart looks just absolutely beautiful. Like you look at the daily on it, and it looks amazing. So that's one of the reasons I really like it. Unfortunately, the financials are a little shaky. They don't really have, you know, their cash flow is kind of dwindling. So we'll probably leave this one off. I just wanted to point it out because of the chart. I've just been watching it. So AEM is a mining company. So this is a precious metals mining company. Basically a play on gold and silver, so it's an alternative play. It's in a flag right now. So for the third one, we'll just put commodities. And I don't think AEM will stay in there. I have other ones that are better, so we can actually just get rid of that one. AER is a financial company. I believe they do aerospace financing and leasing on planes. So as we could see, they had recent highs of 65. And overall, because they lease their planes, their earnings have been really good. And because they have contracts, they've been really good. But unfortunately, their last one wasn't so good. But let's dive into the financials here real quick. So price to earnings is extremely low, 7.2. In the industry, we're probably looking at a 16 to 25 for safe, so we could think at least we have a 2 to 2.5 upside. So we're going to put this in finance as the category. And we're going to keep this one in there. I really like this one as a finance. Okay, so yeah, what's up? Sure. Right. This no, fair enough, and that's something that's definitely fair. Um, I just think that the risk reward here um, is very high. So, if we can find some cheap leaps on this, that would be excellent. And you can see volume is picking up, so we're getting a nice flag here. So, I think in the short to midterm, at least for 2021, early 2021, we should see this push back towards at least in the mid 40s. I understand. So you're familiar with AirCap then? Yeah, because and it is something to consider. Um, I'm just trying to have a broad sector coverage. When we really decide to pick our myth, I got it. I'm recording it myself. I don't actually need someone to do it, by the way. I've just decided to do it myself because it's super easy. I got dual monitors, so whoa. So yeah. Anyways, we'll look at the end, and basically we may not even add this to our final portfolio, but it's nice to have at least options from every sector. So we might not even add a sector to the portfolio, but again, we want to build the sector out with each sector having at least a couple options. So because we have a lot to get through, I'm not going to spend a ton of time, and then at the end we can ask questions and stuff like that. So AFMD is a biotech company. The reason I have it on here is it's a possible takeover company. So basically what that means is it could possibly get bought out for like the $15 to $20 a share. So if we could find like some really, really, really cheap leaps on it, it might be worth getting one or two on just for shits and giggles. If it costs us like $50, possibly with a couple $100 upside, it might be worth it at a low risk, high reward. So I'm gonna actually make a section here called. Well, basically, what I'll put this in here as biotech, and then what I'll do is next to it, I'm gonna put a T for takeover target. And we're going to talk about a couple of those here going forward because I have a bunch that I like as takeover targets. So the idea with takeover targets is it's nice to find ones that are on the rise. So like you could see here that earnings are rising and going towards positive. So this company is on the rise and could just turn around on its own. But we have the upside there of possibly getting that giant payday overnight. So Allison Transmissions, if you're in the car industry, you know what Allison Transmissions is. They got hammered this year, but they are making a comeback, and their earnings have been looking good. So if we look at their financials here, we can see earnings. Our revenue is still going up, and their PE ratio is a 9.8 in this industry. That is extremely low. I mean, it's the auto industry, so PE ratios in the auto industry are all over the place. But I mean, generally, if you think of the S&P 500 having a PE ratio of 33, for me, anything under 20, no matter the industry, some industries are a little different, but for me, anything under 20 would be considered something that has good upside. So once you get into that 40 and up range, then you're starting to think, okay, there must be either it's just a hot company that's on the rise, that people really think they're gonna come into their own, that they're building like Netflix, had a terrible PE ratio forever, but finally coming into their own. So I have this in the auto industry because we do need to have some plays in the auto industry that are not EV based, and Allison, all cars need transmissions, so Allison is one that has always done really well, and the technical is good and the financials are good, so we can keep that on there. So ALSN, and the volume is a little low, so that's something we need to keep in mind. Applied Materials is a semiconductor. They make the machinery. I believe they make the machinery that makes chips. I know they're a very hot company to hold going forward. So what we'll put that in is, I think we should have a semi category. So we may not in the end choose it for the semi category, but just had a recent breakout there. Interesting. Kind of got a rising wedge here. I'll put it in there. We may not keep it at the end. What the mother... AMD. I like AMD for long term. I think it's going to have a little bit of a pullback because it's got to fill these two gaps here. But, I mean, there's nothing wrong with AMD long term. I just think short term what we should do is make sure that we time our entries and not try to chase it right now. Now, if it breaks out above the 87 mark, yeah, maybe we want to go after it. But I would be a buyer down in the 58 to 60 range. This would be ideal to buy down here. Even the mid 60s, if you didn't want to risk it not going down here in between the two teal and blue lines would be good. So I'm going to add that on there. Amazon, for me, retail, we need some retail stocks. Amazon does look extremely bullish. I mean, they had basically one move here, and now they're making the second move. The fundamentals, though, while good, they're still overvalued. I mean, they have an 80 PE ratio. They've never really been below that. I mean, they make a shit ton of money. They made, what, 1.6 trillion this year? That's pretty stupid. I don't think I'm going to put it in my long-term portfolio. I don't think there's a ton of upside anymore. I think it's pretty fairly priced. All right, ATV. If you can see this chart, I'm going to be adding this one. So gaming I'll have as a category, ATV, and I already know I'm going to add EA, so you can add EA in there as well. If you're making your own, if you want to wait after, I will upload this as well after. So yeah, we're going to get to COM. Don't worry about that. Hold on 1 second, I'm just reading some stuff here. Is the stream still blurry for you guys, or is it okay? Maybe it's my internet. Alright, could be we're having a storm here, so I apologize. I am recording this though, so I'm recording it, so hopefully the recording should be good for everyone. So yeah, ATV is automatic, just based on the chart, and technicals are good too, so there's nothing we really need to do other than just play it. I think right now is actually the perfect time to get in. It could go down to 67, but even if it goes down to 67 long term, we have a price target of 105 with a potential price target. If you watched my cup and handle videos, you know that the real price target should be about 130. So alright, AUI is another gold company. It does have a nice chart setup right now, so we might end up adding this just based on the chart alone. So I'm going to add that to commodities, our AUY. It's a very cheap one to get into too, so this has a major upside, and this is actually a takeover target as well. Alright, Broadcom, chip maker, pretty much just goes up. So let's look at the financials here. 46 PE ratio, cash flow, they got plenty of money, so we're not worried about them going out of business or anything. Looks like they've been investing in their own company a lot lately, so you know, we're looking at cash from operating activities is going up, it's continuing going up. It does look like the pace that it's going up is slowing down, but that's okay. Balance sheet, they're not in any worry about not being able to cover their liabilities for any reason. So yeah, let's add this as a possibility to the semiconductor. We do have some financials to go through here. Oh wow, AXP still has upside. I know this ran really hard lately, so we'll see if we end up adding this or not. I am not going to add Peloton. We will look at Peloton when we're done. I think Peloton's overpriced garbage. But you never know. I'm okay with not playing Peloton, but alright, we're going to make a new one called FinTech, and we're going to add AXP. So basically we're going to pick one between AXP, MasterCard, and Visa. So by the end of this, we'll know which one that is. So statistics, 15.5, cash flow is kind of wonky. Balance sheet isn't great. Actually, I just want to go through them all right now, and then we won't have to skip back to this. So MasterCard is right here. Bounced off the 50. MasterCard looks good. Let's look at financials, balance sheet, statistics. Ooh, maybe AXP is a good one. Visa real quick. Let's look at Visa. Balance sheet is fantastic. Cash flow, not as good. P ratio, not as good. I got one more in the FinTech between these four. Do have a nice little gap there, but we do have some upside here. Financials, balance sheet is fine. Cash flow looks good. P ratio, oop, yep. Let's go with, so I would say American Express or Capital One would be your FinTech that you're looking to go after here. Hold on, I'm just getting some text messages here real quick. Let me just read through these. Oh, okay. People talking about football. So yeah, for FinTech, we're gonna go in some more FinTech, probably with Square and PayPal as well, but we'll get to those. I just, between the credit card companies, I just like to pick one or two. There's no reason to go after. So one of the big, there's two big sectors we're going to focus on, well, three really. Travel, energy, and tech are going to be the big ones. And we'll probably end up, because I want those to be ones with probably the most value going forward, those will probably have 5 compared to other sectors which only have 3 that we put in our portfolio. So Cabot Oil and gas, you're going to see a lot of charts that look like this in energy. So basically huge downtrends with consolidation in the most recent area. So one of the things we're going to be looking at is, okay, we want fracking safe, and we want upside in the future. So when we're looking at like financials and stuff, we'll look through these a little bit more heavy to determine which ones we want to do on the energy side. So balance sheet, they are fine, not in any trouble. Cash flow, is increasing. That's good. Market cap has been decreasing, and the PE ratio is at like a 10. So this one has huge upside. So 17, is at 41. Even at the current PE ratio, you think you have at least 100% upside here. So energy will end up being a big one. We're going to do COG there. Alright, COM I did in the newsletter, so I already know we're going to put this in tech. So you can see here, broke the downtrend, and it's about to break another downtrend. So it's basically curving back up. So it's on the up and coming. Tech, where did I put you first? Okay. This is also a takeover target, so it has dual purpose. Alright. ConocoPhillips is another energy one. So basically what we want is just the highest PE and strongest balance sheets. So cash flow looks fine on here. So then volume looks fine. So we'll add that to energy, COP. Ooh, I didn't add one on here. Need to get that added. Alright, so we were on COG. Wait, I jumped around. We should be on Boeing. Alright, Boeing in the defense sector and aerospace. I'm just going to include it in defense. Boeing, was in the 350s, the 400s forever. They did get crushed in earnings. Let's look at their balance sheet to see how we feel. Ooh, this is why people have been down on Boeing, is they have a lot of debt, like a lot. And they've always had a lot of debt, unfortunately. Cash flow, negative cash flow, that's not good. They don't really have a price to earnings, so yeah, I mean, the thing is that it's too big to fail. It's a government defense contractor. It just, I think there's better ones, but we'll add it in there as a possibility for now. Baba's one of those that I feel like if we went long when it was in the 150s, it would have been good, but now it's in the 260s, and it seems like it wants to come back down to 240, so I'm going to put this as its own category as China stocks. We'll put BABA in there for now. We may not keep it, though. Bank of America, in terms of banks or finance, obviously when it was trading 35, 36, and I believe at its peak it was at 55, so I think it can get back there. I like Bank of America. I know it's one of Berkshire Hathaway's top holdings, and I know they've been adding more. Balance sheet is fine. That is a shit ton of balance sheet. Price to earnings 12. So you can think, yeah, this has at least a double upside here. So we'll add that to finance, Bank of America, and it's cheap. Leaps on this are going to be cheap. You could get some 30, 35 leaps fairly cheap. So BlackBerry, probably laugh at this one, but BlackBerry does have value. This is kind of like COM. Unfortunately, the only real play on this is a potential takeover. So I don't think we're going to keep it on there, but did want to discuss it because it did have a nice bounce off here off the downtrend. So it is consolidating here. The problem is they don't really make money, and they haven't forever. Balance sheet is fine though. Because they don't make money, they don't have a PE ratio. Cash flow is dwindling, almost non-existent. So we'll leave this one off. But if you just want to keep it, if you just want to take a flyer and get like a $10 leap on it for a couple bucks in case they get bought out, that might be something worth doing. BCO is Brinks, security company, armored truck company. Really got hammered by COVID, obviously. Yeah, so I'll go through this real quick. So for leaps, there's different philosophies on it, and this is kind of my philosophy on it. If you're really bullish on it, I don't see a problem with out of the money leaps, but if you have, it's more of a risk versus capital. So if you have capital and you're just looking to preserve capital and grow it at a nice rate, in the money is the way to go. 100% I would always recommend in the money over out of the money. But if you have a smaller account and you if you have a smaller account and you're looking for exponential growth, you could potentially get better rewards from out of the money. Now you don't want to go crazy out of the money. You want to still have it somewhat realistic. But if you go a year or 2 years out, you don't have to hold it the whole time. Let's say 6 months from now, those have doubled. I would probably sell it at that point. You know, if it's reached your price target and things in the PE ratio stabilized, that would be the time where I would probably think about selling it. So we're looking at here on this is getting to the point where it's starting to really reverse. You know, it got out of this bear flag right here and broke out here. So now we're looking at it potentially breaking back up. So we're at 57, and it used to be pre-COVID almost $100. So we have a nice upside here, and the financials are reversing too. So we do see the balance sheet is a little iffy, unfortunately. Price to earnings is a little iffy, but this is one that for the sector, we'd be looking at commercial services here. There's not going to be a whole lot that we're going to be putting on this leap for commercial services, so this might be one that we consider if we want to include commercial services in our portfolio. And this is always I don't think this is a buyout candidate, but you never know. And this is a lower volume one to consider as well, so keep that in mind. So Brookfield Energy Partners. This is basically a solar play. If you like solar, BEP could be your solar guy. So as solar becomes more and more popular, the chart looks nice too. My problem with a lot of the solar companies is, and this is I think going to be more of a midterm hold, so you might want to take like a 6 month to a year out. The balance sheet is fine. Cash flow is increasing, so that's good. PE ratio, they don't really have one because they don't really their EPS or P is pretty much negative, but we'll put a solar category in there. And I know BEP is a lot of it's very high recommended by analysts, so we'll keep that in there. Baidu, I like Baidu long term. I mean, they used to be almost $300. They're at $150 right now. Finances they've been hit very heavy, but they don't really have, as a tech company, their overhead is very low. Their balance sheet is amazing. Their cash flow, peaked in 18 and it's kind of been reversing, so it's something we got to keep an eye on. But they used to have a really nice PE ratio, and lately, they've been getting hit just like everybody else. So I do want to put this on our China list. And the chart, we have this double top right here that we break out over this. Which looks like we tried and failed. So if we can get above 150, we filled this gap right here, and above 150, and this thing can, 150 to 180, 150 to 190 should be easy, and then after that, we're good to go after that. So let's put Baidu on there, see if they could turn around their earnings. This is a crazy stock. So I love Biogen long term. I think in the biotech area, I have. I don't have Billy on the list. Not to say that we don't need to have it on the list. We can look at it real quick. Is it this one? BILI. Oh, it's nice. I love that. That cash flow is awful. So their cash from financing is up. So basically they've been raising lots of money, but they don't actually make a lot of money. I'm gonna keep it off. I don't really care for it. BLDP is Ballard Power Systems. So this is a an electrical company. They make obviously like the generators and stuff behind solar and all these energy companies. So I felt like in the energy sector, I don't know if I'd consider this probably more manufacturing, even though they make energy. I'm gonna put this in a manufacturing, but I really like this. I think the chart actually looks quite good. So I'm gonna put BLDP there. So BlackRock is the world's biggest investment firm. So we can see here BlackRock. I'm gonna look at their financials, and they're gonna be crazy. Yeah. Actually, not that bad. Still not crazy. Problem with BlackRock, I've done it a couple times with calls, but the volume is super low. The upside, I mean, they could be $1,000 stock pretty easily. Dividend yield for a stock of this size, 2.1% is still pretty good. But I have a feeling we're going to find better finance companies to go into. And so and we do have a rising wedge, so we're going to leave that one out. We're not going to look at any crypto right now. Hold on one second. My throat's getting dry. I'll have to bust out a hand grenade. If I told you I was going to drink a hand grenade, what would that be? Oh. Come on, where's my adults here? So for consumer, I really like Budweiser for the long term. I think they've been really good at adapting and keeping their market share. Now, a hand grenade is a Mickey's. Mickey's. I don't know why. It's like my cheap beer, my go-to cheap beer. Mickey's malt liquor. They're in like hand grenade shaped green bottles, and they have little like anagrams on the bottom of the caps. Pretty cool. Alright, so here's the cool thing about Budweiser. Cash flow and balance sheet are decent. Their cash flow, while contracting, should start to go back up as they pivot into some up and coming craft beers and seltzers and things like that. They've been really starting to get that market share there. So price to earnings is very good. You know, they're still at 17.7. You know, they used to be a lot worse, so they've been getting, you know, their price to earnings has been getting a lot better. So I believe we're going to start to see, we're kind of near this supply zone right here, and we do have a bearish formation, unfortunately. We do we do have this bear flag here, and we also have so basically for me, if we break out of here, I'm gonna go get into Bud long term. I mean, you could just get shares on this. I mean, think of it at its peak. You know, it was in the 140s, and now it's, you know, 65, 67. This is a very low risk, high reward. I can't imagine it would go down much more than it's currently at. I mean, it's near its all-time lows. So, and you can see the volume has been extreme over the last year. So we do have a lot of buying volume, and the buying volume is picking up. So you can see we kind of have this inverse cup right here. But the handle would have been right here to go down, and it broke the handle. So we do have a confirmation here. So Bud will be one of my top consumers. BX is Blackstone Group. This is another finance company. I like the chart a lot. Basically, you know, we have so if you were to try to see if this cup and handle is still accurate, basically going to go down right here. Did it hold this? Don't love that as much after looking at that. If it could hold, this is probably the 50% tilted cup right here. So as long as it stays in this channel and bounces out of here, this could be a good one. I haven't looked at the balance sheet yet on this one, so let's look at this real quick. Balance sheet, fine, not going out of business. Cash flow doesn't I mean, P to E is fantastic, but cash flow isn't wonderful, and free cash flow is a little concerning, considering you know, they've raised a lot from investing activities. So that means they might do another one. I'm gonna keep that one off. Beyond. Oh my, what have I done with this? Yeah, we're just gonna do that. Okay, so let's look into the financials on this. Balance sheet, not bad. I'm surprised there actually. I like it. Cash flow. That's not good. Financing. All their money is from financing. Yep, not putting that hot garbage on my list. I feel like Citigroup had something here happened. Something bad happened here, and that really put them in the negative light, because they were one of the like golden childs of banking. Let's look at their financials real quick. Balance sheet, fine. Cash flow, not as great. PE ratio, very good. So if we are going to go bullish on finance in the upcoming, what the mother? What is going on here? Holy bejesus. Wow. That to me says that they diluted their shares a lot. This is Citigroup. That was interesting. Yeah, I don't. I'm gonna put it in finance for now. But I have a feeling I'm gonna replace it. All right, Carnival Cruise Lines. Basically, there's three different cruise lines we could potentially put in travel. Since we haven't done any travel yet, we're gonna go through a lot of travel. Um, so CCL probably has the most upside, but they're kind of like American Airlines of the cruise lines. They have the most upside, but they also have they have the hardest road to recovery. I mean, they're losing almost 3 billion a quarter right now. Their PE ratio is fantastic though for what it used to be. So we'll put CCL on there. I still think there's three cruise lines we should look at. RCL is another one, and I have a feeling the third one we look at might be the favorite. Um, Balance sheet. Yep, that's the one. I think between Royal Caribbean and CCL, I'd feel better with CCL. And then NCLH, I believe, has the best balance sheet of all of them, which should be reflected in the fact that they're similar size in terms of Caribbean, but they're obviously higher price. As you can see here, 16 to 20. These used to be the same price, and this one's kind of pulled away. And you can see total revenue has been just fantastically going up. Balance sheet is fantastic. Cash flow, free cash flow isn't fantastic, but nothing in this industry is. So I think it's just a toss-up between the two. NCLH is probably safer, but Carnival Cruise Lines probably has higher reward, but the risk is higher as well. So CDNS is a technology packaging company. Um, so basically what we're seeing here is steady growth, very steady growth on here. Um, Liabilities and assets, you have wonderful growth here. Cash flow, wonderful steady growth. Um, Market cap, steady growth. Low PE ratio, 19.9. So the nice thing about this is it also has a very linear trend. We have a nice cup and handle with another handle here. So I don't know what happened here. I'm assuming it just kind of got taken out. We do have lowerish volume on this, so it might end up getting replaced by a different tech company, and most likely will. So it's a safe one though. If you wanted to go with the safe one, CDNS, safe one, CGC. This was in the newsletter. I believe CGC, we're going to make a separate category for weed. CGC is my top weed stock in terms of upside, and the balance sheet is, I believe, really good on this. Yeah, so they have almost 5 billion in assets, 1 billion in liabilities. Cash flow isn't great on it, but to be honest, there's no weed companies that have good cash flow. But revenue has been ramping up extremely well. You can see, you know, each quarter we've been getting higher revenue, so that is good. And the net income has been decreasing, so they have been almost, I believe, by the end of by early next year they will be cash flow positive. So um, with Biden decriminalizing weed and everything, I believe CGC is a wonderful stock with a 50 to 100 upside. Like, it has crazy upside. CGNX, this is another stock that, while it has lower volume, you can't deny what the chart looks like. Financials are really good as well on this. So you can see cash from operating has been always increasing. Cash flow and earnings. PE ratio is a little bit higher, but they've been getting better and better. Revenue, you can see revenue has been increasing. 19 was a little bit worse, but that's probably why 19 took a nice dip here. But you can see here, you know, basically a cup. This is more of a technical play than it is a fundamental play, but that's okay. You can see over 72, this has room to run up to 96 just pure on a technical squeeze. So we had a cup here, handle retrace the 618, which is a perfect handle retrace, and now we have the handle breakout above 72. So this is a electronic company, so electronic equipment, so this would be manufacturing. So I'm going to put this CGNX in our manufacturing division. CHL would go under our China division. I don't know a lot about it. I just kind of came across it in my research. Basically, they're China Mobile, you know, obviously a mobile technology wireless communications company in China. Financials, I think when I was looking at it, were pretty good. You know, they have a lot of assets. Cash flow is fine. 11 PE ratio, so pretty low there. Revenue has been decreasing, unfortunately. So that's something to be concerned about. So we'll put it in our China category, but we may not end up playing it. Cigna, in terms of healthcare, I know I'm going to pick better ones, but Cigna has a bright future. Cigna's been struggling to get over this 220 mark. So if it, you know, it's tested it many times and failed the 225, 226 mark. But it does have a nice massive bull flag there. Revenue has been increasing quite nicely. Balance sheet is fine. Cash flow is fine. PE ratio still at a 15, so it still has upside to about 280. So in terms of what we'll put that in, that would be what I would consider healthcare. Problem with Cigna over other healthcare is sometimes the trading volume can be a little low, but it is a wonderful stock to go long on. Clovis is a takeover technology takeover target in the technology sector. We do have basically a floor right here, and we do have you know, this is kind of a penny stock, and really the play on this is they need to get bought out, basically. They have more liabilities than they have assets. Their cash flow is very bad, and they don't have earnings. So basically they need their shit to get approved, and then they need to get bought out. So this is a takeover target. I'm not going to include it, but I wanted to highlight it because I know a lot of things out there A lot of articles out there talk about it, so take over target, but we'll probably not end up adding it to our long term. But if you wanted to do it on your personal side, you certainly can. There's another energy company, Canadian Natural Resources, oil and pipeline company in Canada. Very good balance sheet. Um, Total revenue just keeps increasing. Balance sheet fine. Cash flow fine. Statistics 9 PE ratio because they got hammered this year. So this is going to be a very wonderful stock to go long on in the energy sector as energy becomes more of a focus. So CNQ, let's add that one in there. That's going to be a top one we're going to want to keep. Capital One we talked about. Cabot Oil and we talked about. Com we talked about. ConocoPhillicos. Costco. Costco is one of those ones that just keeps going up. You know, it's one of those stocks where you can feel safe with it. I think it might be one we keep in our retail. I feel like Costco. What is BJ? Oh, wholesalers. Alright, well, I'm going to talk about Costco. I don't know anything about that. Costco's revenue just keeps going up, though. If we have time at the end straight, I want to get through this as fast as possible so then we can open it up to questions. But I want you guys to see, like, literally what it takes to build a long-term portfolio is just literally just grinding like this. So assets to liabilities, good. And we're at a 38 PE ratio, which is really high, but the chart's not bad, and they pay a good dividend. It's only 7.74, but they do have special dividends. They do a lot, so let's keep it on our list. Cipri is, Capri Holdings, apparel, retail. Very high upside. I have it in my long-term portfolio already, so I know we're going to be fine there. Balance sheet is a little iffy, but for retail, theirs is really good. And CPRI. CRM is Salesforce. Wow, I've been pretty accurate there so far. Salesforce basically needs to fill this gap to 219, and I would feel very comfortable going long on it. Yeah, CPRI, you got it. So balance sheet fine. The price to earnings is just absolutely ridiculous on Salesforce. I'm not going to add it as my long, but I did want to highlight it because it's a very popular stock. But what I want is I want value. I don't want pennies worth of earnings. When I make a long term, I want value. So Kron, in terms of weed, probably my second favorite. They actually make money, so that's interesting for a weed company. So balance sheet, wonderful cash flow, still negative, but I'd feel very comfortable with Kron in our weed portfolio. I think Kron and CGC are my favorite. CRISPR is a biotech company. We're not going to get into that. That's just on my list. I could probably take that off. CVE, Ciavannis Energy Company. This is kind of one of those that extremely high upside, very low dollar amount to get into. Really what we need to look at is the balance sheet. They're going to be fine. Cash flow, they've been fine. PE ratio is 7. That would put us at about maybe a $12 upside, so in this range. So I'd feel very comfortable them coming into the $8 or $9 range again. I think this is a really good energy company that we can add, and this is why energy is going to be one that we might have quite a bit in, and we just need to know which ones to pick. CVS, I'm already going to tell you, is one of my favorite long terms. I'm actually going to put CVS in healthcare and not retail because they're more of a healthcare company now than even though they have all the drugstores, the majority of their money is made off of their healthcare business. So we don't need to get really big into this. So CVX is actually the next one we're going to talk about, and this one I want to talk to you guys about for this week. So they pay out their dividend this week. I think on the 20. I don't know. It's in Project Mercury. What is that dividend date? 17th. So that pays out Tuesday. It doesn't pay it out, but it goes ex-dividend Tuesday. So Monday, Tuesday, Wednesday, CVX should be a wonderful play. Calls on CVX Monday, Tuesday, Wednesday would be a very smart thing to do. Because you have basically really good sentiment on energy right now with companies rotating into energy stocks again, and then you also have the dividend on Wednesday. So DBX. Okay, so DBX, they don't really make a ton of money, but this is kind of a COVID type play. Like their revenue profit has just been going up and up and up. Balance sheet is it's okay. Statistic wise, price to earnings, nothing spectacular, but the thing with them is they're kind of at the low end of their trading. Yeah, they just kind of trade in this range, but the big thing about DBX, which is why I think you should have them in the long-term portfolio, is I'm fairly certain they're going to get bought out by some big tech company eventually. So they'd be a cheap buyout. I mean, they could be bought for probably $15 billion at like $25 to $30 a share in this range. And that would be instant glory deck there. So this is another one I came across. Deck. They make like Uggs and fancy shoes and things like that. They've been very COVID resilient for an industry that really, like, imagine if you bought them at the low end of COVID, 79, and now they peaked at 280. I'm not going to add this to my portfolio because I don't see tons of long-term value. I think they're going to be peaking here soon, but even with their current price, their PE ratio isn't bad. At a 20, there's still upside there. So something to consider there. Oops. Something to consider there is they're in a bull flag. As well, so not gonna be my long term, but I like it. I still like it. So Dell has been switching from a manufacturing company more to a software company. You see that a lot, actually. Statistic-wise, price to earnings been pretty good. Lately, it's been a little bit worse, but annually, their price to earnings is pretty good. Balance sheet. Yeah, we're going to leave them off just basically because I don't love their balance sheet. Okay, defense sector, ETF. This is aerospace and defense. So aerospace, if we're going to go long on aerospace and defense together, wonderful stock to go on, and I think we should go long on this pretty easily. They shouldn't have any. Yeah, I was gonna say they shouldn't have any statistics there. So the problem with defend though is Boeing is a huge part. I have Katos on here. We're gonna talk about that. We're only on the D's. We're working towards it. Dr. Horton, consumer durables, home building. Yeah, Katos is. Where are you? Oh, it should be on here. It's on my. It's on my spreadsheet. It's just not on my list apparently. I didn't add them all to my watch list, so oops. Where are we at? We're at defend. Excuse me. So DHI, I love this stock. Home building, consumer durables, they have just been making more and more and more money. I find that this is kind of like manufacturing, consumer durables. We'll just put this in. What's a good category to put this in? Put consumer, I guess. DHI is a very big. Thank you for the bless you. Disney. I mean, Disney Plus was a huge thing for them, and I'm not going to add it to my long term, but the mouse usually wins long term, so do have a cup here and potential handle right here, so keep that in mind. Just ignore this right here because of COVID, but if you were to take COVID out, they're in a cup and handle, and potentially, from here 189 blah blah blah, that gives us about a 180 upside. So maybe we will add this to. What do we even add this to? Tech? What do they classify this? Consumer? Okay, we could put that in consumer. Discovery is another one. Yeah, I never doubt the mouse. So this is there's different consumer services that I would, satellite TV, things like that. Discovery is one that I've been looking at. Their balance sheet is decent. Cash flow is decent. Cash flow's been going down, but still decent. Before the price to earnings is very well. I really like Discovery for, it's curving back up here. So I think this is kind of the bottom of the cup, and I think Discovery is going to see 45 again. I really like Discovery. Disc A. There's a couple of different consumer ones that I really like. Disc A and Viacom. And the other thing is they are a potential buyout target as well. So I could see them getting bought out as well. Dollar Tree. Oh, I didn't even know I did this. When did I do that? Interesting. Must have did that the other day. I chart so much, so they're just a good company. I mean, people love cheap shit, and they keep making money. I mean, the price to earnings isn't amazing, but it's not bad. PE ratio 25. As long as they keep increasing cash flow, I see this as I could see this as a 120 to 150 stock. In terms of retail, I really like Dollar Tree. I think it's safe. The thing is the more poor people are, the more they're gonna want to buy cheap stuff. My phone is just getting blown up right now. 1 second. Thomas, why are you texting me? You should know better. He wants to know how to paper trade. Alright. Let's get back to business. Okay, so Dollar Tree, gonna add that to long term. DocuSign, this is coming back down. I feel very confident that DocuSign is overpriced right now. And we'll go through balance sheet, not great. Cash flow increasing, yes. PE ratio, really ridiculous. They make money, but not a lot. It's not a long term. I talked about EA earlier. EA looks wonderful. Chart looks beautiful. Financials are fantastic. I mean, they have no liability issues. Yeah, they got a little hammered lately, but I mean, price to earnings is a little bad just based on recently, but that's going to change. They're going to, in my opinion, EA will eventually be a $250 stock. So in terms of gaming, EA and ATV are probably the two best. Why is my phone just keep getting blown up? Why are you all texting me? How'd you get my number? It's like on Discord how I get like a text message every fucking 10 minutes. Alright, so this is a low volume stock. This is an electronic energy company in the aerospace and defense industry. The chart looks prime. Balance sheet is okay. PE ratio is down there. We're going to leave it off, but I wanted to highlight it because it looks really cool. Expedia. Unfortunately, I think the opportunity on Expedia is gone. This is like one of everyone's favorites to get back into. I think when it was down in the 40s and 50s. Ooh, how futures doing? Futures still look great. Man, we're gonna go stupid tomorrow. Trust me. If you got calls, you're gonna make money tomorrow. I wouldn't be surprised if you got in those comm calls if we open at like 11:50 and you're up 500%. I think comm could squeeze to 14 this week. Who here got in those when I shouted those out? Anyone? I think a couple of you bought a couple because, I mean, for $10, the upside there was just stupid. I think I bought like 15 of them. I actually ended up getting more at $15 a piece and $20 a piece towards the end of the day. Because, I mean, it just kept going stupid. I couldn't believe it. I mean, it almost got to $11. I was like, shit, this is almost in the money in the same day. So, Expedia, unfortunately, great company. As travel comes back, they're going to be fine. They're not in any danger in terms of liabilities. Unfortunately, they hadn't made any really money this year. But I just think that the time to get in was here. So, Ford, there's better companies out there. I do like, I think Ford is at the precipice of turning around. Balance sheet, they're going to be fine. They do have a higher balance sheet. But they're just getting hammered by the rotation out of gasoline vehicles and into electric. I think it is something we need to pay attention to. Ford, the thing with these dinosaur companies is they take a long time to adapt because of everything. Because they're so big, there's so much more hoops to jump through. Until Ford's over $9, $9.5. I'm not gonna confirm it as a reversal, but let's say it gets over this line right here, the 950 mark in the next year. Then we could talk about going along, but as of right now, it's not. Okay, Diamondback Energy, another one of those sneaky energy companies that has like ridiculous upside. These energy companies are just ridiculous. This is one that I saw as a potential buyout target in my research. They do have good asset liability, so they're not in danger of going out. You know, the thing is their market cap just keeps dwindling, but the revenue's not bad. Total revenue's been going up this year. They got kind of hammered, so I really like them as a comeback, and I believe they just broke the downtrend right here. So, yeah. So, I really like them as a short-term and mid-term and long-term. So, in terms, you're going to find this as a very strong correlation with energy. So, Facebook, I think Facebook's gonna keep going stupid. I like Facebook in the long term. PE ratio 31.9 is actually below Apple and Microsoft. So we're gonna add Facebook to our tech. FCAU, Fiat Auto. In terms of the auto industry, I'm gonna start speeding up here because it's already been an hour and a half. I knew this was gonna be a long one, so I already know I'm going to add this one, so auto FCAU. FCX we're going to add to our commodities. FDX I'm not going to play. Fiserv and FinTech. Look at something on Fiserv. Nope, not adding Fiserv. Actually, yeah, Fiserv is overpriced. Fizz, Fortnite. So this is a cloud software security company. I thought I liked this one. I'm not going to add it though. GE, we can add GE in manufacturing. I like GE. And this is why they just broke their long-term down. They're basically 3-year downtrend. They finally broke it. So, Gurn, get rid of Gurn. Guild, I like Guild. They're at the bottom of this channel. They like to go in this channel, so I expect them. I think they break out of this. I think Guild will be fine. We're gonna put that in biotech. Guild, GLD for gold, can't go wrong with that. For commodities, Gleba was a communications company that I found. I think what I liked about them is they keep going up and they keep making tons of money, and I believe their price to earnings is still really low. Yeah, their PE ratio is still really low. I don't know why. I don't know what's going on with this. There's something funky about it. Like they keep making more and more money. I don't know enough about it, but it's interesting. I'll probably keep it off for now. Well, where would we put that in? Consumer? Communications, like a telephone company. Just just do communications. GRNC is Generac. Generac is one of those companies. Again, you'll see a lot of these. They just good companies. Balance sheet good. Quarterly PE ratio is a little higher. Annual one is a little lower. I'm not gonna add it, but it does have upside. We could take off. Goldman Sachs I really like in the finance. So GS we're gonna add on there. HBI is Haynes. This is a retail stock. Think when I was looking at cash flow, balance sheet. It's not awful. They broke the downtrend and now they're retesting it. I mean, Haynes is just one of those brands, though. The upside is there, I guess, is the big thing. HDS is wholesaler distribution. Very good company. Very good PE ratio. Balance sheet is fine. So we're going to add that in. I have wholesalers in here. Where do I put that in? Consumer. We'll put that in There we go. HDS. You like HBI. Nice. Here is another one of those weird they are manufacturing, but I call them a gaming company because they really make gaming headsets. Turtle Beach, they make cool wireless headsets and things like that. Revenue's been good. I think they've been turning around. Cash flow decent. PE ratio is good. The price to cash flow ratio is you don't like to have these. You like this right here. This is good. This is not so good. But balance sheet is fine. I only have 2 companies in the gaming right now, and I think here would be a yeah, they have a lot of support in here. I don't think it's going to go to 92 again, but I could see it going to 30 again. It's kind of doing this. I don't particularly see it going down here, but you do have this downtrend broken, which is nice. So as long as it can get back over 18, I think that would make me happy. But we'll put it in our gaming. HFC is Hollyfronter. It's a energy minerals company. This is another energy company play. Yeah, I really like this for energy. So HFC. Hog was my other Harley Davidson, wonderful brand. I don't really see Harley Davidson. I know they're getting hurt a little bit right now, but I think Harley will be back. We're not going to get into that too much. IBM, I really like IBM long term. I think IBM is going to be fine. We're going to add that to tech. IAPR, I'm not going to add. I think it's crazy right now. I think it needs to pull back to about 110. It's got this cup right here. Definitely needs to call. That's a weed play, but we're not going to add it just because it's out of the mind right now. INSEE is a very good long-term stock. I'm going to start running through these much faster right now because I'm getting a little more tired. So this is a healthcare biotech. So INSEE biotech, very good. Intel, semiconductor, huge upside. Should bounce back. So here's my semi. Put Intel in the semi. IQ is a China stock. I want to pay attention to it. I like it. I've liked it for a long time. Netflix of China. IRM is a retail or real estate. I don't think I have a real estate yet. IRM, and I already know O is going in there. IWM is obviously that. JD I don't care about. JDST don't care about. J&J, it's a little concerning on the long term. We got 3 years on that. I'm not super concerned. J&J looks really good long term for healthcare, pharmaceuticals. We'll put that in biotech. JNPR is another tech company. Information technologies, kind of like Cisco. Really like them. I think the upside is good. So we're going to put them in tech. They're also a buyout candidate or a takeover candidate, however you want to call it. JNUG, JPM. JPM is a, they made this nice little gap here. But the thing with this gap is, the reason why this gapped up so much is you already had all of this in here. So there's no buyers and sellers that needed to come in again. We already have it. So again, we just need to break out above 120, and this is going to go silly again. So JPM, we're going to add to finance. Love JPM. KL is Kirkland Gold. As a gold company, I like it, but I don't really care. It's more of a takeout target. KMI, I really like KMI. Kinder Morgan, oil and gas, really set well for energy, so we're going to add KMI to our long-term list there. Coca-Cola, retail, consumer. Coca-Cola is really good consumer brand. Lumber liquidators, really like them for manufacturing or consumer, however you want to talk about them, or wholesale. We'll put them in wholesale. I like lumber liquidators, and I like WY as well. So WY, this is something you need to know about Weyerhaeuser. Where are they? So Weyerhaeuser is a lumber company, but it's a real estate investment trust. So even though it's a lumber company, they're set up as a real estate investment trust. So 90% of their earnings have to be paid back in a dividend. So it's very attractive to consumers and investors because they can buy a shit ton of shares and it has a very high dividend yield. And it's very safe, and as lumber being a nice play, I really like WY as a long-term play. I think 38 to 40 is a very realistic upside. So let's get back to where we were. LMT, yes, love LMT. I already researched a lot of these, so we're just going to run through these real quick. LCRX, they make basically they make equipment for what was it? They make the so like semiconductors. The equipment to make the chips, that's what LRCX makes. I'm not gonna add them. MCK, I can see MCK going back to 250 to be honest. I really like MCK. I think we're rotating back up there. MCK is a medical distributor, so they're going to be distributing the virus vaccine. So MCK, it's a lower volume stock, but a wonderful stock to hold, and they make a shit ton of money. So in terms of healthcare, we'll put them in our healthcare group. Where's my healthcare group? Yeah, we're gonna put MCK in there. 3M. They're a competitor to the company I work for, so I hate them. MMP is an oil and pipeline gas company. Yeah, IQ is once it picks up some steam, I think it'll come back in. So MMP is one of the biggest pipeline companies to go long on. Huge upside. I mean, you could 300% upside here. They make a ton of money. They've never not made money, so they're not in any risk. Energy, MMP, huge one. Go long on it. MNST is Monster. If you like retail, Monster kind of does this thing, so I'm assuming it's going to do this. So you see how Monster goes? This is what it does. It goes cup, 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 and it'll probably make another cup here. So I'm not going to go long on it yet, but I like it on my list. Microsoft only goes up. Microsoft has a PE ratio of about 34 right now, so it does have room for upside. In terms of tech, you can never go wrong with Microsoft, in my opinion. MTZ, Mastech, Industrial Engineering and Construction. I forgot why I have it on here. There was a reason why. We're going to skip over it. Wow, nailed that. I am a genius. Yeah, I think I put that when it was like right here at 50. Nailed that to a T. That's crazy. It's almost like I knew it was coming. I like MU. MU has a very bright future. I think they've been consolidating for a long time. I think in terms of the semiconductors, yeah, I have seen the call full for MU has actually been insane lately. NBEV, we don't care about NBEV. NEE, I like NE, but it's not on my list. Newmount Corporation is a metals company. I really like them for the commodities industry. NEM, Netflix, I like Netflix, but I don't want to go long on it. NEO, I don't want to go long on. NRG, electrical utilities, I like them. Not going to go long on them, though. NTAP, I really liked NTAP for electronic and computers. I forgot why, but I know there was a reason why. I think it was because their PE ratio is ridiculous. Yeah, that's why. 12. So they have at least a $100 upside. So if they could break out over this downtrend here, this would be, they've been consolidating. Look at this supply zone here. If they break out of the supply zone, it's going to go crazy. So NTAP for me. I'm just going to put them in tech for now because I don't have I don't want to make a new category. Nucor is going to be one of the best steel companies, so manufacturing. Got to have some steel in NVIDIA at NXPI. Not going to worry about. NYMT is going to be another RET. We could do. I already have O in there. ODFL is Old Dominion Freight Line with shipping. If you're into shipping, great company. Not going to put it to my portfolio. OMC is Omicron Advertising Marketing. They got really hammered with this year, but very good stock to go long on. Statistics, PE ratio very low, balance sheet, it's tightening up, which isn't great, but they're not in any trouble right now. Hold on one second. Okay. So commercial services, we'll put that in commercial. OMC. Ooh, orange. I think this was a China stock. I really like it though. I think I was looking at their balance sheet and it was like something ridiculous. Yeah, like 12. Cash flow, it's been increasing. Balance sheet, it's fine. I think the problem with it was, the low. Oracle, obviously they, with TikTok, could be a nice company to go long on. They just kind of go up. They're just like a slow mover though. PBR. So this is like Brazil's like oil company, Petrolo Brasilia. They're kind of like a high risk, high reward. I believe it's heavily shorted, so if they could make a comeback, you could see it explode, kind of like what happened over here. It's in a bear flag right now, but we should keep it on our list. They're not in any trouble going out of business. They don't have a PA ratio because they haven't really been making money this year, but they're going to be fine. So let's add that to energy. PCG, I still think they have a ton of upside. I don't think they'll ever get up here because they may get back in this area. That would be my price target, is the 20 to 30 area. PFE. Pfizer, obviously. Biotech, really low PE ratio, but it's a dinosaur. Plug Power. I believe Plug is a solar play. I believe. So they're doing kind of what EV. Okay, so this is something that I'm seeing here. You see how they're going 1, 2, 3, 4. I believe they're gonna go to 45. They're gonna go down right here back to about 19, and it's gonna absolutely explode. I know people have been hammering me forever to talk about Plug, and I'm finally seeing the light on it. You've seen this pattern a shit ton of times. It's good, and I looked at their cash flow and everything. I see it. I see it. I see why people are bullish on it. I think Plug could be the next Neo. Yep. PayPal. I like PayPal long term. I'd love it more if this gap was filled at the 130. I don't think I'm gonna add it to my long term. I think it's fairly priced right now. Yeah, it is. So, Qualcomm needs a haircut. I think they're fairly priced. Regeneron. If you can't see it there, then you're stupid. We're gonna add that to biotech. You're not stupid. I'll tell you. You're just new. This is a clear cup and handle here. You can see I did this earlier and it looks amazing. It bounced off the 786, which is less typical, but even if it came down to 485, the likelihood of this going to 800 is extremely good. Balance sheet, everything is set for it to go. Um, I mean, the price to earnings flow is cash flow isn't great, but that's fine. Everything else is fine, and with them being a COVID play, I believe they will be very bullish next year. So let's add them to biotech. Excuse me, I'm allergic to cats, and my cat's sitting on my lap, so I'm getting a little stuffy nosed. Yes, I have Riot on my list, but no, we're not going to add it. RXT, defense. No, I looked at a lot of things out there. I like save for travel. I can already tell you I like love. Um, Starbucks Shop Series SJM we're gonna look at SJM, yes, for consumers. Love this cup. Love this right here. What we're looking for is a break right here. This is gonna be consumer. Where'd you go? Wow, I put that in there. Raytheon Technologies. Raytheon is a very big defense manufacturer. That was my bad. So Smuckers, I like them for consumer. Chart looks real nice for a turnaround here. We got kind of a cup action going on. There it is, consumer. The only problem with SJM is low volume. So low volume is an issue there. SLM is financing corp. Um, I like them. I can't remember why. I made this. I mean, the problem with making a giant list is sometimes you forget some of the stuff you put on there. Oh, yeah. It's because their price to earnings is like a 5. So they really should be like a $40 stock as long as they keep it up. And they have this nice little... Looks like they're being squeezed right now, so... let's add them to finance, rental, leasing. Silver, you already know I'm adding that. SNPS is a packaging software company. We already talked about that. SPG, they just bought. They're a RET. SPG should be on your list. Spotify, no. Oh, they are really consolidating though. Just don't love it. SPY, SQ. No, thank you. STLD, if you like steel, pretty solid uptrend. That could be manufacturing. STLD. SU is a very safe. SU is actually owned by Berkshire Hathaway. In terms of energy, yeah, Suncor. Yeah, TSM I just think is fairly valued, so that's why I don't have it on there. AT&T should be fine. I mean, they should be like a $35 stock. I don't think we need to have it on there. TKR, Timken, no. Tilray, no. Trip. Yeah, I mean, if you want a travel stock, I like Trip. I think the value's there. Tesla, no. TSM, no. TSN, Tyson Foods, yes. We're going to add Tyson Foods to retail. or consumer. Are they more of a wholesaler? We'll just go consumer. TTO. The only reason TTO is so high is because people keep saying they're going to get bought out. But if you look at their statistics, they are fairly priced. Ah, stupid cat. Oh, I remember liking V&O for my Rat collection. Rat Pack collection. Tilray was one of the greatest shorts of all time, short squeezes of all time. So it is a very small cap, so there's not a lot of shares available, and there is more shares floated than shares available, and it got squeezed hard. Yeah, so West, another energy company. Wells Fargo, can't do it, sorry. Walmart, can't do it, sorry. This rising wedge scares me. WPM, love them for commodities. WY, wind, we talked about wind for hotels and cruise lines. Wind is, I don't know. I like it and I don't like it. I like it, but I don't like the value right now, unfortunately. Yep, nope, not doing that. Goodbye. So, United States Steel. So they're like the dinosaur of steel. They took forever to adapt to new furnaces. They had the old blaster furnaces, and they're finally doing it. But the problem is it's costing a shit ton of money, and it's really hurting their balance sheet. But they're a mammoth in the steel industry. They're probably the biggest steel company. They're just they're just taking forever to adapt, and they'll get there. I like steel, U.S. Steel. It's a low risk because I don't think they're going to go down much more. All right, so all of these are all sector industries. EPD, oh, love EPD. Gotta add EPD on the list. I think I had Katos as a defense contractor / possible takeover target. So we're going to put Katos in there. And we are done. Alright, so now that we updated this, I can export list and give you guys this list. So here's this list. And also I'm going to give you this spreadsheet. Do you guys like it in XLS format? Is that fine? Appreciate you guys all sitting through that. That was a long one to get through. But this is sometimes what it takes. If you really want to invest long term, like, you just got to dedicate a couple hours to this. You don't have to do it all in one night, but I'm doing it for you, so. I mean, this was different than what we normally do, so. What format do you need it in, straight shooter? Which one, the TXT or what I'm about to give you? I mean, it's a text format. What do you? Why do you need that in something different? Like you can open that in any, literally like anything. Oh, that just yeah, hold on one second. Let me get you guys this portfolio. There you go. There's the portfolio we just made. That's in the spreadsheet. Um, so what you're looking at there straight is the implied implied move. So basically what that means is it's how much the options are jacked up. Basically that means options are jacked up by that percentage. So if it doesn't move that percentage, that means that you're going to get IV crushed. So basically that's the premium you would pay over normal. You can use it to your advantage by playing like iron condors and credit spreads and things like that. Does that make sense? Yeah, I mean, if the higher the implied volatility, the more you need to play spreads, basically, like to protect yourself. So I'll do like 10 minutes of questions and answers now. This has been like a 2 hour um, class, but that's fine. I knew this was going to be a long one. I mean, I'm just gonna tell you straight up, the best play is to not play earnings. Play the run up and then sell before earnings, and then you don't have any issues. Yeah. So if you want, you could buy naked options, but never. So here's what I like to do. If you have to play earnings, here's what I would recommend. Buy a naked call option if you're bullish, and then right before market close, sell the call above your call and turn it into a ghetto spread. So then what you're doing is you're protecting yourself against IV crush, and you're still giving yourself upside, and then you're locking in your profits too if you had profits. Does that make sense? Yeah. I mean, people don't use spreads enough. I think that's the biggest issue. Is people don't use spreads enough to their advantage. And you don't have to buy a spread right away. You need to know how to use them to protect yourself against overnights and earnings. Like, let's say you want to play a weekly because you like to gamble like me. So let's say like you buy Kratos today, um, and what you're looking at, you know, you'll say you bought Kratos and it went up. So you bought, it was at $19. So you bought a $20 call, um, and it went up, and you're up like 200%. So then you would sell like the 2050 call above it to hold it overnight. So if it went down um, overnight, you're not losing any money. You would lose maybe a tiny bit, but you're not really losing that much. You still got those profits in. And then if you want the next day, if you want to keep playing it, um, you could buy back that sell that you had, and then you're not using a day trade, and you're playing it again, and you're not losing any money. That's one of the advantages of using what I call ghetto spreads. All right, what other questions do you have? Not all at once now. All right, you want to know what's wrong with P10? They make overpriced garbage. That's what. Oh, cat. Yeah, let's look at cat. But first, let's look at why I hate P10. Price to earnings, 1,300. 1,300. So if a normal PE ratio is 20, and they have a PE ratio of 1,300, I don't need to explain my position on P10. I'm kind of old school. I just am. I know there's momentum and all that stuff, but if you're investing in the long term, um, I I just can't do it with them. I just think they're a fad. I think they're gonna die like every company that gets into the workout space seems like they're here for a couple years, and then you never hear about them again. Tell me I'm wrong on that. Yeah, CVX could be nice. CVX is one of my top plays this week. I really love it. Um, I think it's gonna get to 90 this week easily. I think it retests 90 right here. Um, I really think it does. At least 85. I think it at least gets to 85 or 86. The chart's nice. Um, it just looks nice. And the dividend. Let me show you what happens with CVX on dividends. So here's their dividend here. You can see we got a nice run up here. Here's we'll do this real quick. We got dividend here, run up into dividend, dividend here, run up into dividend. You should short CVX on dividend day, by the way. Uh, Dividend here, run up into dividend. Alright, even here, you see this downtrend, but the week going into the dividend, you get this big run up into the dividend. And here, run up into the dividend. And here, run up into the dividend. And here, run up into the dividend, even on a downtrend. It's only like a day or two, and then it sold off. And then after the dividend was paid, then you get the run up again. Um, this one looks different. Hold on. You got a small bullish run into the day of the dividend. So I would swing CVX calls Tuesday night for sure. I mean, it's almost free money every single time. It's like a 90% win ratio, if not 100% win ratio, swinging CVX calls Monday through Wednesday. I could see it selling off a little bit because it looks like it's kind of rounding. So I would like to see it come down towards 80, bounce right here, or maybe fill this little gap right here at 80.50. But if it breaks 84, or even if it breaks 83.60, if it goes up tomorrow, I would actually I could probably tell you if it's going to go up here. Hold on. What is it? Is it WTO? Is it crude? WTI, that's it. Okay, so typically you want crude oil to go up if you want the oil energy companies to go up. Don't love that, but I think it just has momentum now. You're going to see some squeezes there. Let's go back to Cat real quick. I like Caterpillar, by the way. Big fan. Caterpillar was one of the #1 picks to buy under Biden from one of my research power hours. The chart looks decent. I would say Cat's fine to go long on. I'm not gonna put it in mine. Oh, what did I forget to do? OSK. Did I add OSK? Is it in here? We need to add OSK. OSK should be in here. OSK should be a defense manufacturer, and they should be in your portfolio. I think OSK is easily a $100 stock in the future. It should be, if I'm not wrong. Yeah, 15 PE ratio. They have a high price to cash flow ratio, but that's fine. They're not in any trouble. Earnings are fine. No. Don't play Neo. Stop it. I want to show you something here. Stop you from playing Neo. Do you know what this is called? See these two candles? Even on the 4-hour, Doji reversal, bullish engulfing, bearish engulfing. This is a hammer, yes, but if it's over, okay, let me make it simple about this. If it gets over 45 tomorrow, go long on it. Otherwise, short the shit out of it. There, over 45.30, you can go long on it again because it may squeeze double top and then come down. It is entirely possible. I'm not going to touch it. It could do this. Blah, blah, blah. Pew! I think on earnings, it's going to go to 23. Right here. Right here. If I had my wish, that's where it would go. No, I'm not tweeting that. I would rather actually go through this and do it legit if I was going to tweet it. Hey, anyone, hold on one second. I'm going to stop recording here.